For any trader, there's this one huge question that's always looming. In the heat of the moment, how do you actually tell the difference between a market move that's about to take off and one that's about to fall flat on its face? Well, today we're going to dig into a system designed to do exactly that. And to do that, we're going to look at a tale of two different stocks. Both made a move on the same day, December 26th, 2025. And they both started out with a similar looking jump, but, well, let's just say their stories couldn't have ended more differently. So check this out. On the left, you've got the Japanese automaker Toyota, ticker 7203. You can see it gapped up right at the open and just kept on climbing, a really clean, strong trend. But then on the right, you have this stock from South Korea, ticker 494120. It also jumped at the open, but then it just fizzled out and completely fell apart. So what gives? How could you have possibly known which was which? How could you spot the hidden strength in one and the fatal weakness in the other before it was all over? That's the big question we're here to tackle. Well, the answer, at least according to the system we're looking at, isn't about some crystal ball. It's about having a structured, four-layer system. A better way to think about it is like a pilot's cockpit, a whole set of instruments designed to give you clarity and control in a chaotic environment. And you know what? This analogy is absolutely perfect for what we're about to get into. This system isn't trying to predict the future. Nope. It's about seeing what's actually happening right now, reading the current conditions so you can navigate through them safely. Okay, so the whole thing is built on these four layers, and each one is like a different part of that flight system. First, you've got the opening structure, which is like our pre-made flight plan. Then there's bias classification. That's our real-time instrument panel. Layer 3 is retracement validation, which acts like our turbulence sensors. And finally, you have cloud context, which ties it all together like that big, important weather radar. All right, so let's put this system to the test. We're going to go back to our two stocks and apply this flight system layer by layer and see what it tells us about their two very different flights. So first up is layer 1, the opening structure. Now, this is all about setting up a baseline, taking the emotion out of it before the market even opens. It uses what happened previously to draw these key price levels on the chart. The source material calls them rungs on a ladder. And the system just watches. Does the stock climb the ladder and hold on? Or does it slip and fall right off? And right away, the difference is just stark. Toyota over on the left just confidently climbed up that ladder rung by rung. It showed what's called gap acceptance. The market was totally fine with these new higher prices. But that Korean stock, it tripped on the very first rung, signaling an immediate gap rejection. Okay, so our flight plan already showed one stock was on course and the other was in trouble. Now let's move to layer 2 and check our instrument panel. The system calls this the bias scoreboard, and it basically gives us a number that tells us about the market's real-time health. And for Toyota, the stock that worked, the instrument panel was flashing a big positive 16. The system's label for this? Strong bullish. It's a clear numerical sign that the move was stable and lots of people were getting on board. And this isn't some hidden number. It's right there on the chart for you to see. That little bias indicator in the corner confirms it. Strong bullish, plus 16. That's the whole point, right? It's data, not just a hunch. But what about the stock that failed? Well, that's where things get really interesting. Instead of a healthy, positive number, its dashboard was flashing a big red warning, -9, a bearish score. So get this, even though the price had gapped up, the engine underneath was already sputtering. And again, you can see it right there. That bearish score of -9 is a huge, data-driven red flag screaming that this upward pop just doesn't have legs. It's a warning light telling you something's wrong under the hood. All right, but what about pullbacks? Every trend has those little dips along the way. So how do you know if it's just a little turbulence or if, the engine's about to fall off? Well, that's exactly what layer 3 is for. Think of it as the turbulence sensors. So the system's turbulence sensors looked at the pullbacks in both stocks, and they saw two completely different things. In Toyota's case, it saw them as totally healthy, just buyers taking a quick break before pushing higher. But for the Korean stock, it flagged the pullbacks as a structural failure. In other words, sellers were taking over and dumping their share. Okay, and that brings us to the final layer. This is the one that really pulls it all together visually. This is our weather radar, and it gives us the big picture view of the whole market atmosphere. And this is the visual punchline. Just look at the difference. On the left, our winning stock has these green clouds. It's basically clear skies ahead. But on the right, red clouds. That's a storm on the radar, plain and simple. It's an instant snapshot of everything the first three layers were telling us. So, what are these clouds actually telling us? The green clouds show us that the trend is healthy and continuing. The source material calls them participation zones, a sign that everyone's on board participating in the move up. The red clouds, on the other hand, signal weakness and rejection. It means downward pressure is winning the fight. So let's just recap everything in one spot. It's pretty incredible when you see it side by side. For Toyota, strong bullish, a positive 16, sustained acceptance, and green skies. For the Korean stock, bearish, a negative 9, early rejection, and red storm clouds. I mean, it's not even a close call, is it? The system just lays out two completely different narratives.
So, what's the point of all this? What's the big takeaway? It's really about shifting from just guessing to actually navigating. It's about having a clear, rule-based map to guide you through what can often feel like a very confusing landscape.
When you put all four layers together, the flight plan, the instrument panel, the turbulence sensors, and that weather radar, the system does something amazing. It takes all that chaotic, noisy price action, and it translates it into a simple, readable picture of what's happening right now. When you really boil it down, a system like this delivers on three key things. First, it gets your own emotions out of the way, which we all know can be a trader's worst enemy. Second, it gives you a logical reason for what's happening. And third, it creates that rule-based map you need to navigate with confidence. And that kind of leaves us with one final thought to chew on. In a world that's just screaming with financial noise, opinions, and predictions from every direction, what's the real value of having a clear map that just quietly shows you the territory as it actually is?
This is the brief on the four-layer analytical architecture for structural market analysis. So you know that big price jump right at the opening bell, that opening gap? It's always been tough to figure out if the market is actually accepting it or rejecting it. Well, this source details a four-layer system designed to give you an objective, rule-based answer to that exact problem. So how does it work? It really boils down to three key takeaways. First, the whole thing operates as an integrated process. It all starts with what's called the opening structure. Think of this as setting the fixed, foundational support and resistance levels. Kind of like drawing the lines on the playing field for the day. Second, and this is where it gets really powerful, is how it quantifies everything with a bias classification. This is basically a numerical scoreboard tracking if the market state is bullish, neutral, or bearish. But before it confirms a direction, it validates pullbacks to see if they're just healthy noise or a real structural failure. So you get a hard number. A high positive score means the gap is accepted. A -1 tells you it's being rejected. And finally, it all gets wrapped up visually with these red and green cloud formations. You can literally think of it like a weather radar for market pressure. Green clouds mean the trend is healthy. It's a go zone. But red clouds? That's your signal for weakness and rejection. By combining fixed levels, objective scores, and that visual confirmation, this architecture delivers clear, multi-layered evidence of the market's true structural state.